So I want to talk about the evolution of a day trader. When you start learning how to trade, a lot of this you go through stages, and I've said this in a blog post. It's like peeling back the layers of the onion, and the first thing is recognizing A plays, and the next step is actually pulling the trigger on the A plays, and the third step is managing the A plays. So basically, I've gotten through the first and the second step. I'm recognizing the A plays, I'm finding them, I'm setting alerts on them. Um, they're on my watch list on a daily basis. I usually have at least one, sometimes more. The second thing is pulling the trigger on the A plays, and this is harder than you think sometimes. I struggled with this for a while, and now I've been practicing it and I've been getting better at it, but I am pulling the trigger on the A plays. But the part that I'm at where I really need to work on is managing the A play. So basically, for example, this is a chart of OVTI, which was this was on my watch list. I blogged about it yesterday, the June 17th at night. I posted a blog. This stock was on it, and I was ready for it. So I entered. I do have it in my rules that I can enter if a stock hits my breakout price and I don't necessarily get an entry. That is in my rules that I can enter it without the intraday break, but it's not something that I've practiced before. So this was kind of my first time in a while trying it out as a more experienced trader. And see, I didn't want to miss the move. That's another thing that's been happening to me a lot is I've been missing the move because I'm waiting for an intraday break, or I'm waiting for a pretty, or an entry pattern that I'll never get, or I'll try to get in and then I don't get filled. So on this one, I saw the potential for it to be a big breakout. I didn't want to miss the move. I got in at the break of the daily breakout point, which was not giving me any type of pattern at all. I just got right in. So honestly, this is something that I think comes with experience. I think that when you're first learning, you should definitely be looking for those patterns, only entering when you have your entry. And then as you become more experienced in the market and kind of get a feel for different types of trades, then you can kind of do these more advanced entries where you're just kind of getting in, even though you're not necessarily getting a specific pattern on the 2 minute. So I got in, and I had a target, I had an extension around 1970, and 1970 was just in my mind, and I didn't know what this stock was going to do. The next level from there was $20.30. And I was like, man, for it to go to $20.30, that's kind of pushing it, but we're looking at a $20 stock here, so it's not impossible. So what I did was my husband taught me this. I kind of just made a little box to engulf the size of the most recent, biggest candle, which was this candle here. So I made my little box to measure that candle, and then I put this box here at the breakout point, and I said, okay, this is where you have to envision if a stock can hit this area. And, looking at it, and obviously looking at it now, it's very obvious that it could. But at the time, I was looking, at a more conservative area. I was being very conservative in this 1968 level, 1970, you know, and now looking back at that, that looks kind of ridiculous. I mean, that's just a tiny little bar, but there were some smaller range days on this stock, so you don't know, you never know. So I took the safe route on this, but here's the thing: I could have been in bigger size on this, and I didn't position myself properly. I didn't have a lot on it because it was a higher price stock than what I'm used to. But my entry at 1950, my risk was very little. So I could have gone in double what I went in to begin with, and then I could have just scaled some out here, kept some on, and let it ride. But, I'm kind of limiting myself when I go in with these small positions. And, I'm limiting myself to my scaling, because then I can't scale. I can't really scale out as much as I want to. And I love scaling out into strength, and I would have scaled out some here. And then I anticipated, you know, I thought about rebuying after I got out. I was like, man, that was stupid. That I tried to get a fill at the top of this bar around 71, but I don't the bid was at 71, and I just hit market, and I anticipated to get out at 71, but I didn't. I got a fill at 64, which was really crappy. Not what I wanted at all. So that didn't go as planned, but it is what it is. So then I was looking at it, thinking to myself, this is stupid. This is going to be a big breakout. I see the potential in it. It's got strength. The buyers are keeping it up. So I thought about buying the dip here, and I didn't. I guess I was a little flustered from the way I managed it here, and I didn't want to take on too much risk. But thinking of it, I could have waited for this pivot low to confirm itself, and then maybe entered around 66, 67, and then had my stop behind this pivot low to just kind of keep it safe. But I also had another opportunity to enter at the intraday break, and I was thinking about that too, but I was just too clouded from the way I traded it here that I just couldn't get over the fact how bad I managed my size and managed the trade, period, that I just couldn't get myself to re-enter at these amazing opportunity points. Because when you see something like this on a $20 stock, yeah, it ran up, it pulled back, that's one opportunity to enter, and then it gave you the intraday break around 74. And if you're looking at a target around 20 of this thing, or even 2030, which, look at this, it's the high is 2017 for the day, so it's really not far from that extension level. And that it's not far from where my little box, said we would be. This looks funny. Let me look at that. Yeah. So obviously the measurement here is giving me like 2050s. I don't anticipate that at all. I'm anticipating this next extension around 2030. So I would not be surprised to see it hit that. Or this may be it, and that may have been the high. Totally fine, like extensions are not an exact science, but it got pretty damn close. So, really, I am now focusing, now that I'm entering the trades, I need to focus on managing them properly. And this was very poor management. I should have anticipated this pullback and a continuation to see, and gave it a chance to see if this was really going to be a big breakout. I had the entry. I mean, my entry was 1950. So I had plenty of room to give this thing to work, and without having to jump the gun and get out. So really, that was my big, 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 big mistake, because as you can see, this ended up being a picture perfect breakout. Picture perfect. So just to recap, your first got an alert. Your first step is recognizing the A plays. Your next step is pulling the trigger on the A plays. And then your third step is managing the A plays. So those are the things that that you need to work on, and I am working on managing the A play, as you can see, this pathetic management here.